Buyers are poking around again, but sellers are struggling more than they realize. Listen, there's no doubt buyers are sniffing around again. We just experienced a short lived rate dip that sparked a mini wave of activity. Me, myself, I personally was able to clear out a few listings that had been lingering for a few weeks. But here's the truth, that window slammed shut just as quickly as it opened. Rates ticked back up, and now buyers are hesitating again. So we're in this kind of interim, if you will, right now. And nationally, we're seeing the slowest summer for home sellers in over a decade. Newsweek reports homes are sitting longer than any point in the last 10 years. CNBC confirms 2023 saw the lowest U.S. migration rate on record. Just 7.8% of Americans moved. And 2025 is on track to stay flat again. So that tells us that people are stuck. You got jobs, rates, equity, family, fear, whatever the reason, they're frozen. And now locally, the data is showing the inventory is way up, closed sales are way down, days on market are up. But here's the kicker. What's really surprising, median prices are still up and sellers are still getting 0.5% of list in Metro Detroit, which tells us the pain is coming, but it hasn't shown up for pricing yet in Metro Detroit. So I believe that we're in what I would call the denial phase, where inventory is building, buyer activity is choppy, and we're still pricing like it's 2022. Eric, what what do you think about all the so rates came down? They came down to a great number. The lowest that I saw was 6.15. I don't know if they actually got lower. And now today I looked and they're at 6.37. What do you make of all this?
Well, I think that's the golden question. What's going to happen with all that? I mean, even my cat jumped up when you said that, and she said she was ready to hear when are rates coming down, right? So I think the question is they are coming down. Now, is it going to be linear? No, they're going to go down. They're going to spike back up. They're going to move a little bit every time we get a new piece of economic data. Now, the Fed cut rates 2 days ago. What most people didn't realize is those rate cuts were already in. That's why rates were already at a low. Like the market knew what was coming. The Fed signals those things ahead of time. They ticked it back up essentially because there was an initial jobless claims report that came in more favorable. Not as many people filed for benefits that week as had in the prior month. So with that happening, doesn't necessarily mean that rates aren't going to continue to come down. It just means, hey, there was a tick up in the economic data. This happens every time a new piece of jobs data comes out or a new piece of inflation comes out. The market's going to react. Did it react hugely? No, but if you look at what's happened, probably lenders pulled back a little bit more than what they should. I think those rates are still going to stabilize kind of where they've been until, again, the next piece of economic data comes out, which, I mean, this happens 2, 3 times a month. So they're going to continue to move. There's probably a little profit taking in the bond market there. I mean, we had a pretty good run coming down over the last month. And yeah, I don't see this as a long-term issue. And I think people just need to realize that, look, rates aren't going to go to 4% overnight. That it's going to be a steady decline. And I think, yeah, if we can get people down to where we're seeing, 6% by the end of the year, maybe get something into the high fives if people want to buy points and get it into there, I think it's completely doable. So um, I would, if I'm a buyer, I'd be getting out ahead of the rush right now. If I'm a seller, realize that this is not going to be like, hey, all of a sudden the Fed's going to cut rates and I'm going to get $10,000 more on my house. It's not going to happen. But there is, sunnier days on the horizon.
Now, let me ask you, so when they hit the 6.15, did you notice an uptick? I mean, I was reading a couple articles that said refinances are up. I did read an article actually, I think a week ago, that said mortgage applications in general had their highest week that they've seen in a couple years. Is that
Yeah, no, 100%. There's definitely an uptick. If you think about it, if we can get down into those sixes, there's a glut of people. Like everyone that's purchased in the last 3 years has a higher rate than what they could likely be getting now. So there's going to be increased activity. And similar to kind of what we just kind of hashed through is it's really hard. You're stuck in your house if you're at a 3 or 4% interest rate, you feel very stuck going to 7. So as we get down to 6 and 5, I think it's a little more of a bridge that homeowners can handle going up a few percent, especially with all the equity they're sitting on right now. Right now, all of a sudden, going up in payment maybe isn't quite so bad because I am cashing out a lot of money, and so that's kind of where we're at as far as refis, yeah, both refis and purchase. I've personally seen a big uptick probably in the last 2 weeks on just people getting interested again. People reaching out saying, "Hey, what's going on in the market? I've heard rates are coming down." And even if it's not the exact time that they should be refinancing with rates ticking up just in the last day and a half, it's time that you should start asking these questions. They should be reaching out to you about selling their house, about buying a house. They should be reaching out to their mortgage lender about, hey, is it time to start pulling some equity out with a home equity loan? Or is it time to think about refinancing and get my rate down? So it's a great time to be inquiring. Education is, knowledge is power. And unless you're reaching out and asking, you don't know.
Yeah, 100%. Like I said earlier, I've seen it too, firsthand. There was 2 listings I was struggling with the last 30 days, and when that rate came down, both went under contract. It's just like magic.
Well, it's affordability, right? It comes down to you can drop the price of that house $10,000 and maybe it's a $60 difference on the payment, but if rates drop a half a point, that's maybe $150 difference on their payment. It really is the leverage point that we're at in this market is hey, we need some lower rates and get the affordability of the house down, the month to month that people are worried about, right?
I'm glad that you said that. So I want you to say that again. $10,000 would typically save roughly $60 a month, but a half point would save, based off
Yeah,
of
no, no, a
what
half
price?
point, I mean, if you think about it, if it's depending on the size of the mortgage that you're talking about. If you're talking about, God, the median list price in Detroit is probably over $400,000 now. So if you have a $400,000 loan, a half point in rate is equivalent to 150, $200. And so it makes a big difference when we can get that rate down versus just trying to cut off amount from the list price. And that's why, I think you and I have talked about it in other podcasts. That's why these temporary rate buy downs really are a great way to market homes because you're reducing the price and using some of that to pay for a buy down, but it means so much more to the buyer getting that rate down to where they can afford the house than it does just lumping off, $5 or $10,000, which doesn't mean a whole lot in their monthly payment. So
100%. 100%. Well, here's my advice, based on all the data that I look at on a daily basis and what I'm seeing in the marketplace. If you're selling, don't chase the market down. If you're buying, lock it up fast before those rates dip. This is a prime window for buyers. The activity just started to drum up, but again, if we're anticipating that rates are going to pull down hopefully to that low 6, high 5 in the next 4 months, that's going to push those prices up. So this might be a somewhat of a short window, if you're planning on buying, to get in while the competition is at this point in time. What do you think, Eric?
no, 100%. I mean, the one certainty, right, is that everything is somewhat uncertain. I think if rates dip significantly, you're going to see a rush to the market with buyers, which potentially could drive up home prices again. On the flip side of it, just like last year, right? This happened last year. We had a big dip in September, a bunch of economic data that honestly turned out to be pretty wrong, but it doesn't fit. change the fact that it came out last September, October, sent rates right back up to where they had been, up to the mid sevens. So you never really know. So if we're getting to a point where, hey, rates are a little bit lower now, houses are a little bit more affordable, it really is the window of time to probably jump because, hey, if they go favorable, you can always refinance. If they are tick back up, well, then you caught your window of when the house was affordable for you. So
Yeah.
yeah.
Great advice. Great advice. Great to see you, Eric. And looking forward to the next one. See what happens over the next 2 weeks here.